Welcome to the morning market briefing. Today is Friday, July 10th, 2026. Got young TK in the house. It's a Tom only podcast today, so
It's been a while.
probably gonna hit a new record on views, as we often do. It's the most popular combination, many people are saying, on our YouTube page. But let's get into it. TK, are we in a ceasefire or are we not in a ceasefire?
That is the question. That's been the question, I think, too. According to a U.S. official, talks over a permanent peace deal are continuing despite clashes threatening to shatter the already fragile ceasefire. So maybe we're almost gonna break the ceasefire while we're firing at each other.
I mean, that's the thing, is that Trump basically said the memorandum of understanding on the ceasefire were over. Now, 2 days ago, he said that. And yet it seems that the report is that they're actually trying to maintain the ceasefire. It's all very complicated. We had a lively discussion here in the office yesterday. I think I am in Andrew's camp that I think that there will probably be further escalation. I think that Trump loves to make a deal. He loves people to see him make a deal. And when people are not amenable to deal making, I think he gets cranky. And I think there's a possibility that we could see another weekend full of fireworks if things continue to go the way they're going.
Do you think it's a boots on the ground situation, or are we bringing back the? I think we're bringing back the blockade.
I think we bring back the blockade. I think we start actually attacking infrastructure. I mean, I don't know. I think the problem with hey, you have 24 hours before we blow up every bridge, power plant, and desalination plant and reservoir in your country was a strategic mistake, because the best way to do that is to just do it. So I think now we have, I don't know if it'd be the element of surprise, but the element of, we're not going to be doing the thing where we say, hey, we're about to just destroy your country from the bottom up. I mean, it worked to get into the original ceasefire, but I think that now the ceasefire is, if it continues to crumble, then that's probably the next move, is to do that without warning. That's what I would do, at least. I don't know. And there's also reports that Israel is revealing, a fresh plot by Iran to assassinate the president. I don't know.
It's the cherry on top.
Yeah, it's like, if it's true, then not great. But whether or not it is true or not, people are going to be like, well, the Israel vibes are maybe as low as they've ever been, despite the fact that they're the only bastion of learning in that entire sandy hellscape that is the Middle East. So I don't know. I don't know how much that changes the game, but that's the big report this morning, is that they're plotting, or have been plotting, to assassinate Trump again. So keep your head on a swivel, literally and figuratively, particularly if you're Donald Trump. But it's going to be an interesting weekend. I think that we'll probably see something happen, if I had to guess, but I'm just tired of this. Moving on, big news, and this is more, I think, AI news that's sort of, I don't know how I would describe it other than kind of funny, but we saw Ben Bernanke get tipped to be a big, important piece at Anthropic yesterday.
Yeah, the former chairman has joined Anthropic's long-term benefit trust team as an oversight body to ensure the firm remains accountable to its public mission.
I mean, I think that the real move is twofold with Bernanke, which is, one, government connection, two, investment bank connection. I mean, I think it's just it's a strategic move. It's a big splash. He's a former chairman of the FOMC. So prior to Jay Powell was Janet Yellen, and prior to Janet Yellen was Ben Bernanke. He oversaw the rise and fall of the great financial system we have here. So you could argue he was partially responsible, at least, for what was the global financial crisis, and also partially responsible for keeping it from collapsing completely. But it's interesting news, because yesterday we had a 30-year bond auction that is being widely reported as the worst bond auction since 2007, which they're now saying that the poor bond auction in 2007 ultimately led to the Bear Stearns collapse. If you read the Bloomberg article, it basically is saying that high interest rates caused the global financial crisis, which is anyone who's watched a movie or read a book in the last 20 years know that's not necessarily the case.
There might have been a couple other factors going on at Bear
Yes,
Stearns.
there are a number of other factors, but they're basically trying to frame it as this is 2007, the world's about to collapse because interest rates are high on the long end, and that it was the worst bond auction since 2007. Now, I would note then it was by less than a basis point cheaper or higher yield than what we had in May. And not only that, but that was a 30-year auction that was very poorly. There was very poor demand and people were not into it, and that led to a bit of a tail, whereas this one was actually one of the stronger 30-year auctions on record. And in fact, things got so sideways yesterday for I don't know, call it half an hour or so. The 30-year prior to the auction got up to about a 518, which is the highest we've seen in this entire high interest rate environment. But the auction went off at a 505, and as a result, that really stabilized yields. We saw a lot of buying towards the end of the day as we saw the auction go off so strongly. It was like 78%, 77% indirects, which is the second highest on record. So foreign demand is extremely high for the 30-year. People are seeing the value there. And not only that, but when we hit that 518 level, we also hit the highest level of real yields ever recorded for the 30-year. So when we talk about real yields, the higher your real yields are, the more restrictive the interest rate environment is. So the idea that the Fed needs to hike interest rates would be an attempt to raise real yields, which is essentially how much what the headline yield is, your nominal yields on the 30-year, so call it 518 at the time, minus your expected 30-year expectation for inflation. So we basically hit 3%. We were like 2.98%. So that's the idea. You could buy a 30-year bond, and the expectation is you would earn above and beyond inflation a 3% return for 30 years, which has never been seen before. Usually real yields are, kind of if we're in a restrictive area, kind of 2-ish. If you're in an easing area, you're probably flat or zero or even negative real yields, which is what we were for a lot of the zero interest rate environment, which is that inflation is going to be higher than the actual yields. And so buying bonds, particularly negative yielding bonds in places like Europe, where you were basically losing money no matter what you did. The only way you could make money was on a trade if you got someone to buy it at an even more negative yield. So real interest rates are showing themselves to be anywhere and everywhere along the yield curve, but at the highest point ever recorded on the 30-year, which means that they're cheap. They're super cheap. And it also means that the interest rate environment is restrictive. It's as restrictive as it's ever been, which is going to have a downward effect on inflation. And what it's going to ultimately do is probably bring rates down naturally, as opposed to anything the Fed is doing. So I would caution people, if you read these articles this morning, they're like, well, next stop is obviously 5.5, and then we're definitely hitting 6 on the 30-year. That would only really be facilitated by two things. One would be just incredible inflation, which we are not seeing. I mean, oil has not really ticked up all that much on the dissolution of the memorandum of understanding, and unbelievable growth, which we're actually starting to see kind of a rollover, it feels like, in terms of growth, particularly in what's been driving inflation. If you ask the new Fed regime, which is going to be oil and AI demand. I mean, even this morning, there was an article in the Wall Street Journal, Atlanta Journal and Constitution, saying that a proposed new data center that was supposed to go on Powers Ferry has been put in a 6-month freeze due to environmental factors. They don't want it going in. There's like an 11-acre development being planned on Powers Ferry.
I think the aggregate, there was an article in Bloomberg a couple days ago that was like $100 billion of data centers planned for either the end of this year or next year are being put on hiatus.
Yeah, I mean, there's the one in Virginia that was in the Wall Street Journal saying that public outcry. There is the one going on Bells Ferry. They do have the inroads in like the big dirt mound, where they build a dirt mound so you can't see something from the street. Yeah. That's going in. I've seen that one, driven by it. Shout out to super user codename Scott, who sent the article to me this morning about the Powers Ferry one. Interestingly enough, it's the guy who's putting together is a guy named Chuck Clay, who is a prominent attorney who used to operate on the square. Brock Clay used to be the name of the law firm. It's something else now. But my roommate, like 20 years ago, was a lobbyist for Brock Clay. and he left Brock Clay to work on the campaign for a young up-and-coming candidate for lieutenant governor by the name of Brian Kemp. So when we were back in the day when we were living in a dumpy apartment, ironically off of Powers Ferry, I would hear a lot about how they were trying to get Brian Kemp elected, and smash cut 20 years later, he's on his way out as a long tenured governor. But
future pres, maybe.
I once went to the Christmas party at Chuck Clay's office, and Bob Barr was there, which I thought was cool because he was running for the Libertarian seat. I guess that was the 20. I can't even remember what election that would have been, but he was the Libertarian candidate. I guess it would have been when Mitt Romney was running against Barack Obama in 2012. Yeah. So anyway, ancient history, but more AI news. We got OpenAI. We got news. We got Meta. TK, take us through it.
All right. So on OpenAI, their number 2 executive, who I hadn't really heard of before, Finjay Simu, is stepping down from her role as CEO of AGI Development. This is your agentic capabilities that OpenAI has been working to catch up with Anthropic on the past couple months. She has a worsening neuroimmune condition, so she is leaving some of her responsibilities to President Greg Brockman. And then a report in the Wall Street Journal this morning on OpenAI and Google have been legally but supplying AI services to overseas subsidiaries of Chinese companies like Alibaba and Tencent. These companies are blacklisted by the Pentagon, but they can technically still offer these services. Anthropic has completely banned these Chinese entities due to concerns over distillation. So we talked a little bit about yesterday about the increased demand of these Chinese models. While they're a lot cheaper, they still aren't as robust as these closed source models. So what they're doing is something called distillation, which is basically, you can think of the stronger models like OpenAI, Anthropic's, even Meta now's model, as almost like the teacher. Rather than training the models on publicly available information, they're actually training the models on the better model, and it's kind of a way to steal their secrets in a way.
You just ask OpenAI to train a new OpenAI.
Basically,
and you get 80% of the product for 10% of the cost.
And then you don't have to pay for the compute and stuff like that. So that's been a concern, and OpenAI has suspended Alibaba's access for the same reason, but hasn't done the full wide Chinese ban like Anthropic does.
Interesting. We also got some news out of Meta. They're unveiling Muse Spark 1.1, first ever paid developer tier for Meta. And it seems like they've actually quietly, I feel like Meta has really taken a back seat in the last 6 months on the AI talk. I mean, they've got cool image generation, and that's kind of what people use Meta AI for. But it looks like they've quietly been assembling the team.
I don't think I've ever seen sentiment on a company just by the general investing community. There's still a lot of bears against Meta, but within the last 5 days, it has completely been a switch up from tons of people. So they released a Muse Spark model. They have image generation, but this is really their first model that has been able to compete with the tier of models one behind OpenAI and Anthropic. It's above Google's coding model. It's as good as the last ones, and the API that they're offering with this model is 25% of the cost of the rival models. So it should be interesting to see if they're able to take some market share.
Yeah, and the thing about Zuck is he's constantly doing things in the shadows. I mean, it's almost kind of what he's known for. But, I mean, they've stood up that data center in Louisiana, which is kind of the first of its kind where they're actually paying the municipality on the backside of the grid to have huge power. I mean, they put everything together. They've got the data centers. They've got the power grid. They spent billions of dollars hiring all of the smartest people in the AI space. And yet they've sort of just become like an afterthought. But I think that he's quietly putting together all the pieces. And then when he switches it on, it's going to be big for them. I always tend to index the idea that, like, even if Zuckerberg is wrong, he's great at pivoting and finding something that is right. And he does it in a way that, because they have such scale and such insane cash flow, they can just, reroute it to something else and then stand something up that is better than everything else.
Yeah, and then simplifying that, I mean, one of the bigger sell-side firms in the tech-based semi-analysis put out a huge bull case that kind of encapsulates this. They kind of talk about, at the simplest level, if you're trying to build one of these frontier models, you need data, which a large chunk of the population spends a fourth of their free time giving their data to Meta.
Doom scrolling.
You got talent. Meta's spent billions of dollars. They paid basically $13 billion for Scale AI's CEO, Alexander Wang, who's leading their charge right now.
Alexander what?
Wang. And then,
Got him.
and then you got the compute, which they're building out right now. People were like, there was concerns even last week the stock was selling off. Man, does Meta have excess compute? They're going to try selling it to other people. It's like, no. They're actually doubling their compute capacity next year to keep up with the demand for selling as well as the demand for their internal model.
Yeah, I tend to think that Meta's undervalued here. I mean, we talk about it all the time. What company would you buy? Close your eyes. You can't sell it for 10 years. I tend to have Meta up there on one of the higher possibilities in my mind for a company that could be. I don't know what they will be doing in 10 years, whether it's glasses or
It'll probably have an ad somewhere.
Yeah, I just feel like they are able to put worms in people's brains in a really effective way and have been since Facebook hit when I was a freshman in college. Wrapping up, let's talk about some of the worst companies on the planet. Delta.
Having a good year. I think they're up like 30% this year, but, you know.
Well, until they start having a bad year and we all get to pay for their...
Until the tickets go down.
Yeah. I mean, it seems like... they're obviously doing well. It doesn't hurt that they can just raise prices with carte blanche because everyone knows that jet fuel is more expensive and that as it comes down, they're probably not going to lower prices and that's going to create margin for them. But when demand drops, we all get to pay their paychecks at the governmental level as we do with all airlines. So just be prepared for that one day where we get to bail them out again.
With what you got within 5 years, they go bankrupt.
Yeah. I mean, there's no worse company than an airline. I cannot stress that enough in my mind that these are just, listen, my dad flew for Delta for 30 years. I really only fly Delta because that's really your only option out of Atlanta. And I like Delta as a consumer, but as an investment, I just think
it's just perfect competition.
It's just, it's a dead end.
And they make money on credit cards, not flights. So
yeah, exactly. Not a lot left on the agenda for today. Next week, we got small business optimism. We're going to start to get a number of different companies. We'll get JP Morgan, Goldman Sachs, Fastenal, all reporting early earnings, Johnson Johnson, BlackRock. Some of the big dogs are going to come through. So lots to talk about next week. I'm really interested in Goldman just because
they've been absolutely going insane.
They're the puppet masters once again. They fell off for like a decade, and now they're back, and they're back in a huge way. So maybe it is 2007.
It's every deal. It's like, oh, Goldman.
Yeah. So we'll see how that turns out next week. We'll get PPI, and yeah, we'll see. We'll see what Monday looks like. Every weekend we go in thinking one thing, and then the world has changed.
Something's gonna happen. Something's gonna happen this weekend.
Yeah,
I think.
So
something spicy.
So we'll see what Monday morning looks like. But everybody have a great weekend. Again, as always, questions, concerns, worries, reach out to the boys, and we will talk about them here on the podcast. And we will see you Monday.